Joins us now from Bell Direct in Sydney with more details. Julia, we've got to be happy with 4 days of gains in a row.
Richard, a good day for the Australian share market, and we've seen the market now reach a 10-day high on the S&P ASX 200. If we have a look at the leads coming into our market this morning, we did see a bit of a mixed performance by the US. In fact, the Dow was only up by 0.2%, and we saw a negative performance by the other indices. In fact, the S&P 500 does look like it's going towards a very critical technical level of 1,100 points and looks like it's going to challenge the 2009 highs. So it is quite a critical time for the US market, but we didn't see a very strong lead from the US market overnight. We also didn't see a very strong lead from commodity prices, which stalled with not much of a lead from the US dollar. So given those leads, the Australian market performing very well with a rise of 0.5%. As you mentioned, it's the 4th consecutive day of gains. Leading the gains on the market was the property sector. We've seen Investor actually cancel its plans for initial public offering, and that means funds which had been selling out of some of the property stocks to make room for this initial public offering were now getting back into the property sector. So that was great news for the property sector. We actually saw that sector gain 4.2% today. We saw some economic news also dominating here in Australia as well as around the region. Consumer confidence dropped 2.5% in November. We also saw some numbers coming out of Japan. They were much better than expected. We saw machine orders rise more than twice what analysts were anticipating, with a rise of 10.5% in September. We also saw some good numbers coming through from China on the industrial production front, but they were overshadowed by the yuan loans, which about halved in the October numbers. So that was a negative when the numbers had been digested. But altogether, a good day for the Australian share market. If we have a look at where we are technically, this is the Australian share market in 2009, and you can see that the point that we're at the moment, we're challenging the highs that we set in October and touched in September as well. So quite a critical point for the Australian share market. If the Australian share market does fall from these levels, you can see an almost classic head and shoulders reversal pattern forming on the Australian share market. But for the time being, looking pretty good. The 4th consecutive days of gains and up 0.5% today.
Okay, Julia, Zenco shares were sold off though. It's all a bit of a profit downgrade?
It wasn't a good day for Zenco. Now, Zenco is an engineering and project management company, and its shares have been doing pretty well in 2009. In fact, if I bring up the share price graph, this is what it looks like. And in the year to date, we've actually seen the shares rise by 93%, but in the last 30 days, it hasn't been good news for the stock. We are seeing the stock now in a downtrend. Today, the stocks didn't do too well either. They were sold off quite heavily, and that was on the back of both a profit downgrade as well as a revenue downgrade. So the market really not liking the sound of that. Now, Zenco is saying that some large-scale projects that it was hoping to have been awarded in the last quarter of 2009 now look like they're going to be awarded early 2010, and so they've changed their forecast. In terms of revenue, they're now forecasting $435 to $465 million, and in terms of underlying profit, their new forecasts are now $26 to $30 million, and that's down from $40 to $43 million previously. So some significant downgrades flowing through there, and the stock down 2.5% today.
Julia, St Barbara Mines, the latest to undergo a capital raising.
St Barbara Mines is looking at raising about $124 million, and it will be through an entitlement issue. It looks like they're going to be offering 4 shares for every 13 shares that are currently held. They're looking to raise the fund in order to have the flexibility to pursue growth opportunities. Now, if we have a look at St Barbara Mines, it's actually a smaller gold miner, and with gold prices at record prices, it suddenly makes it economical to pursue some of the lower grade deposits that weren't when gold prices were under 1,000 US an ounce. So the very high gold prices at the moment is making it viable for St Barbara Mine to pursue some of these growth opportunities. So that's what they'll be doing with the funds. Of course, the shares in a trading halt while they pursue this capital raising. If we have a look at St Barbara Mine's share price, this is what it looks like. You can see that the shares have been steadily rising since August on the back of that record gold price. But today, in a trading halt while they do this capital raising, the new shares will be issued at 27 cents, which is a significant discount, so a 25% discount from the last traded price.
Julia, always enjoy your analysis as usual. Thank you.
Thanks, Richard.